All right, what's up, everybody? Happy Tuesday. I just want to make this real quick video about this virtual loan that we just closed. So, this guy came to us wanting to talk about what it would look like if you potentially paid an extra $1,000 a month towards his loan. No intention of refinancing. We didn't do the original loan for him. He just heard about us and wanted to talk to us. And so, the first conversation we had was about looking at what that $1,000 a month would do for him, how quickly he would be able to pay off his home, and this was his original interest rate. So he was going to pay, his original rate was 8.375. He was going to pay an extra $1,000 a month, and his new payment after the extra 1,000 would have been 4,610. His payoff time is 15 years, and it's going to cost him an extra $1,000 a month to do that. Now, granted, he wasn't married to this number. He didn't have to pay it every month if he couldn't afford to. His regular payment was only $3,600, so this was in addition to that. But he didn't have to stick with it. Now, his game plan was to do it, and so we looked at a different option. We looked at this option here, which was the 5.875 rate, a 15-year fixed. His new payment would have been $3,960. It's about a $350 increase from what he was paying originally on his 30-year, but we would accomplish the same exact thing, pay off his house in 15 years, and then it's only going to cost him an extra $350 compared to the 1,000. So it's effectively saving him $650 a month. A big deal for this guy was actually going virtual. He had no idea we can actually close this loan virtually. He travels a lot. He's hardly ever home, and it's hard for him to even get signing. He did his loan a year ago with another agency, and they had been hounding him about refinancing and trying to help him get a better rate. And he just didn't do it because he was under the impression that, well, for one, they gave him such a high rate and he was kind of upset about that. But two, was because he thought he couldn't close without having to be available, and his schedule was just impossible to plan around. But his cash to close, we just closed this loan this week, was $813, as you can see down here. And we took him to that 15-year 5.875 rate, 100% virtually closed. It took him about 20 minutes on a virtual call with a notary to get all this done. And then his disbursement date was just yesterday. We were able to get all this stuff done, and he was super happy about it. But I want to go break down the numbers a little further just so you can see how big of an impact this really is for him. All right, so in order to understand just exactly what we were up against, first we wanted to take a look at what his original loan was going to do. So he had 29 years left. He had bought the house exactly 1 year ago, and this was his original loan amount. He owed a little bit less than that. This was his rate, 5.375. Now, we talked about the extra $1,000 a month. We ran the scenario to see what that looked like. So, like I mentioned earlier, it was $3,600 a month that he was paying towards principal and interest. And if he increased it, it would be $4,610. And he would have to stick with this number for the next 15 years until the house is completely paid off. Now, total, since I'm assuming for the total amount of interest paid, would have been, that's what his original loan balance was going to be paying if he just kept the loan, which was highly unlikely, but still, I mean, that's a really high number. Remaining on it over the next 29 years was $785,000. Total interest, if he made the extra $1,000 payments, would be $3,906 and whatever that is. And then this was the remaining amount of interest that he would have paid. So he had already paid close to $40,000 of interest just in the first year. And so I saw this and I told him, well, let's try a different scenario. Why don't we instead do what I recommended, the 475, 15-year. We got a 5.875. We could have gotten better, but his credit score was just in the high 600s. We needed really to be in the high 7s or mid 7s even just to get him slightly better. That's part of why, his original loan was 8.375. Now, whoever did this loan, I'm not going to throw you under the bus, but oh my gosh, like you guys really cooked them here. And it just pisses me off to see when lenders give such high interest rates. It sounds like they gave him some credits as well, but even after I looked at the documents, they were just charging him so much money. He had no idea. It was his first time doing a loan. So I explained this all to him. I told him about how the FICO works and how it affects your credit. We're potentially even going to look to refi this thing further if it makes sense. But I mean, his total interest paid is so low, it might not even make sense to touch this thing anymore. But we took his annual interest from $40,000 a year to 27, which is still something, but look how quickly it reduces compared to what the other one would have reduced down to. I mean, just in the first 10 years, he wouldn't have got under 35. Over here, by year 7 or year 5, we're at 21,000, and then just continuing to drop until we hit year 15, which eventually pays off this loan balance. So as you can see, this was just the game changer for him when he realized how much front-end interest he would be saving. His plan really is to use this house to buy another one. He wants to just put as much money as he can into this house, try and get that balance as low as possible, and then he wants to take a HELOC against this house to then use it for the next house, and then eventually rent this property out. So long term, that could work for him. And overall, $240,000 of interest compared to $357,000. And then we paid off in the same 15 years, and he's going to save $650 a month. I mean, come on. Where does it get any better than that? And it was just all about understanding his situation, being able to know where his finances are coming from, how much money he can truly put. That extra $1,000 a month was like putting him right at his limit of how much he can afford to pay down. You know, an extra $350 now saves him that $650 to do whatever else he wants to do. If he wants to fund retirement, if he wants to pay for other debt that he has, just as overall makes total sense. So just wanted to share this quick example. We just closed this loan literally yesterday. Couldn't be more excited for this guy. He's also going to save like $8,000 in payments over the first 2 months. His closing cost is only $800. I mean, this is like a total win for this guy. Just in the first year alone, he's saving like almost $30,000. It's something crazy. So super excited for him. Couldn't be happier for him. Looking forward to helping him and his family in the future for any other planning that they might need. And that's how we think here at Revamp Financial. We want to put people in a better position, leave them better than we found them, so that the next time something rolls around, we're in a better spot than we were originally. But guys, 8.375, that's, for those of you in the lending business, you guys know that's like borderline predatory. Even though it was a year ago, rates were a little higher. I get it. I saw some rates in the high 7s, but like, this is just crazy to see. And his credit score wasn't that much worse than it was now. It's just, you know, it's working with the right person. That's what it all comes down to. But anyway, I appreciate you guys watching the rest of this video. Drop your comments down below if you want me to run other scenarios or see more videos like this. I'm a nerd when it comes to this kind of stuff. I want to break these things down to help people understand. The math is the math, and the math does not lie. And it's all about just running the numbers to see which scenario makes more sense for you, and then having someone that actually listens, not just forces something down your throat. But anyway, hope everybody's well. Take it easy. God bless. Have a great one.